We want to follow the chronological journey and look for the real tipping points. The moments where, the market or a new tax code just forced the whole industry to reinvent itself. Which brings us to whole life. This was what, the 1950s era?
Right around then, yeah. And the key innovation, the big one, was the introduction of cash value. This little savings component meant the coverage was permanent, guaranteed for your whole life.
So it solved that problem. But there was a trade-off.
A massive trade-off.
Yeah.
Whole life was rigid.
hmm
I mean, incredibly rigid. The premiums were fixed. The growth rate on that cash value was super conservative, tied only to the insurance company's dividends.
So reliable, but slow.
Yeah.
In a high inflation environment, a slow, fixed return product starts to feel like you're losing money, doesn't it?
Precisely. It was slow and steady, which was great,
Uh-huh.
until the economy became fast and unstable. But before we even get to the 70s, we have to jump back even earlier, way back, to 1913.
Oh,
Because that year really set the foundation for every single financial benefit we're going to talk about today.
So this is where it stops being just about insurance and starts being about, well, finance and taxes. What happened with the Revenue Act of 1913?
That act gave life insurance two incredible gifts under the Internal Revenue Code. First, there's Section 101A1.
And that says?
It says that life insurance death benefits are paid out to the beneficiary completely income tax-free. That is monumental.
A huge tax-free payout, still a massive feature today.
Oh, absolutely.
Yeah.
But the second piece is what really turns it into a wealth-building vehicle. That's IRC Section 72E. It governs the tax-deferred growth of the cash value.
So the money inside the policy grows without being taxed each year.
It compounds year after year, no current taxation.
So wait, the money inside grows tax-deferred, and the payout at the end is tax-free. Is there any other financial vehicle that has that exact combo?
Very, very few. That combination is what makes life insurance so unique. And that legal structure has been in place for over a century now.
Right.
But like we said, the delivery system, that whole life policy, was just too clunky for what was coming.
Right. So we have this fantastic tax-advantaged vessel, the life insurance contract, but it's paired with this rigid, slow engine and whole life. And then the late 1970s hit. What was the economic trigger there?